Hey folks, David Frost, My Strategic Forecast. And a lot of folks like to take a look for stocks that they would like to short. And the idea is, how do you find qualified stocks to short? There's a method to the madness. So I want to show you a little trick or a way to identify stocks that are ripe to short. So right now we're looking at KB Home. It's a home builder, and this is a daily chart. So what you can see here is you can see that this looks to be a topping tail in development here. This is a daily chart, right? So really have to wait for the day to close. But if you want to take a short on a stock like KB Home, you can take a short current levels, simply put a stop above the high of today, which is 1710. So really your risk is 40 cents on this particular stock. But let me show you a couple of the reasons why this makes a good short candidate, okay? I take a look at the last pivot low from the last downtrend here, okay? Right here is the last pivot low. So now I want to count how many days up until it seems to be topping out. So we have from the pivot low, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and this is the 11th day. So that's important, and my members know that I always tell them time is much more important than price. And this is a good example of time being more important than price. I didn't really care how high the stock went before it topped out, but what I do care about is how many days in a row until it topped out from the last pivot low. And right here we count 10. 10's an important number. Now I want to flip over to a longer time frame here, and I want to show you something else. You see this big down move here? This was on significant volume, okay? The volume on this day was 79 million shares. This is on a weekly basis, okay? So for example, last week on a pretty decent up week, the volume was less than 30 million shares. So less than half of the volume from this down move here. What that tells you is that in order for the stock to get above this high here, which is right at 1725, you really have to have more volume in the particular week. Like for example, this week, you'd have to have more volume this week if it was going to get above there than you had the week when it came down here at 79 million shares. Maybe we do, maybe we don't, but I don't think that's going to happen. So that's two items that are in the favor of shorting the stock. So what you do is, I'm going to flip back over to the daily chart and just reiterate what happens here. This is that big down move here. If you want to short the stock, you can short it at current levels, 1671. You put a stop above 1710. It's a very, very low risk, high reward. Why? Because under normal conditions, the stock would want to come back and test probably around 1550, maybe lower, but your target on this would be 1550. So on the downside, you would have about $1.25, a little less, and your risk is only 40 cents. So it's basically a 3-to-1 risk reward to ratio. That's good in my book. And this just explains some of the things I look for when looking to short a stock. And hopefully this is helpful. Come on over to mystrategicforecast.com. You can get a 2-week free membership. You learn stuff like this each and every day. We put out videos on the overall market, the S&P, gold, oil, bonds, the dollar, and anything else that happens to be moving, certain stocks that are in our portfolio. So come on over, check it out, My Strategic Forecast. Thanks for tuning in, folks. My Strategic Forecast. I'm David Frost.